Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, we are chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, there's a lot to talk about when it comes to the precious metals sector. Unfortunately, again, on the negative side here, we're going to start with silver because silver is having a pretty key breakdown. As gold is only down about $8-9 today, silver's down almost a full dollar, closing in on that 21.5 level. And what's important here is that silver has broken below that pretty strong, let's call it $22 resistance level. You can go a little bit on either side of that, but either way, a lot of the bulls were hanging on to the fact that this has been support and silver was more just trading in a sideways range. Now it's broken down. I realize that's only happened, well, just today, but remember, we are coming up to the end of the month and end of the quarter tomorrow, so that's going to be very important. Let's start with silver, Jordan. What's your takeaway from the sell-off that we are seeing today in silver?
Well, I think today specifically doesn't surprise me that much because if we just zoom out a little bit, the larger issue for silver is it broke below support at 22, which it had held a couple times. And I want to say, I think a month or so ago, I did a video where I was talking about, this looks good. Silver did have a decent bounce from 22 from its 400-day moving average and also the lower 200-day band. So at the time, I was encouraged, saying if silver can continue to hold, actually, I recall we did an interview about it. If silver can continue to hold 22 into next year, like this could be a really long-term bull flag. And of course, we know what happened. Silver ultimately lost 22. So breaking down below that potential bullish formation, that's bearish. I mean, it lost support, and that brings into play the next long-term support targets, which I think are about 2050 and also 18.70. And there's just nothing else you could really say. I mean, it had a breakdown from long-term support, and when that happens, they're usually going to see more selling after that. And that's what we're getting here. And just given how everything else is acting, it's not that much of a surprise. And in addition to that, in recent weeks, gold has been outperforming silver, the gold silver ratio. So it's not been moving in silver's favor.
Yeah, Jordan, I was going to ask you because after 22, really the next support that most analysts were looking at was really that 18-19 zone, which was overhead resistance for forever. It seemed like it took 6 years to finally break above that $18-19 level. That being significant also because that's the cost of most producers at the high end is around $18, maybe $19. Above there, most producers are making money. But if silver pulls back to that 18-19 level, do you think that would form a solid base for support to maybe rally from that point?
I mean, it's definitely possible. I mean, look, the net spec position in silver, I mean, it has come down a lot in the last couple of weeks, and we'll probably see that again this week. It'll probably, I mean, I would guess it's probably getting close to zero. In other words, you have commercials are no longer net short. But the other factors really come into play. The macro market situation. Or do precious metals still have more downside? Is the Fed going to hike rates? What's inflation looking like? Is it moderating less than they think, et cetera, et cetera? So all those things factor into, will we see a sustained big rebound in silver or just a big rebound and then it kind of peters out again? But I do think, that 18 just below 19, I think 1870 is what I have on my charts. I mean, I do think that could be a significant low. I don't want to say it's the bottom yet because it's way too early to make that proclamation. But certainly from a contrarian and long standpoint, silver is starting to look a lot better, especially if you get down to that level. And who knows, the net spec position, maybe you'll have the commercials long a little bit actually. And so that combination would be a favorable setup for longs. I mean, as far as how significant that low would be, it depends on those other factors, it's too hard to predict right now.
Okay, so Jordan, since it does seem like we're at least early on potentially in this breakdown below that key 22 level, and you do see lower prices down into the teens, does that mean silver stocks broadly right now are I don't want to say dead money, but they're even riskier because we don't know just how deep this silver correction is going to go?
Yeah, I mean, I think generally the silver stocks, I mean, compared to 10 and 15 years ago, just the quality of smaller silver stocks is so much worse than what it was back at those times. So I have been pretty cautious on silver for a year, and I mean the silver juniors and all the silver stocks, they'll have their day again, but at this point there's a lot of technical damage there, and I would think that they're still going to be selling in those names. I mean, some of them might hold up better than others, but a lot of those, first of all, a lot of those junior silver companies, they're not real businesses, and they're just, you have the silver price going down. They're just not really investable at this time. I mean, that's just the fact of the matter. There might be a couple that are doing okay because they made a really good discovery and they're growing it. They could maybe do what Silvercrest did. But, other than that, I think it's way too soon to get back into the silver stocks. I think there's going to be plenty of time there to let these things get bombed out and eventually bottom. But it's too, yeah, I mean, it's too soon to get back into that patch. And I just think, odds are we're probably going to see more selling in the majority of those stocks.
Well, Jordan, just shifting it over to gold, then you had made a couple good comments off mic about what you thought may be a scenario where gold could rally next year, and it tied into what the Fed may do, hiking earlier than many expected. Why don't you walk us through that scenario again? I think that was a pretty interesting take on things.
Well, I mean, to make a long story short, it's essentially the Fed hikes rates sooner than we think, and that could be because we're seeing a stock market correction now, but let's say this stock market correction peters out pretty soon, and so instead of getting a big correction, it's just a small correction. The stock market in Q4, maybe it makes another new high, and so people are a little more optimistic about the economy, and so because of that, the odds of the Fed, the market starts pricing in a Fed hike sooner than expected, and so the Fed hikes in the first half of next year. But after that point, if the economy still gains traction for them to hike again, they hike again. But inflation in that scenario, maybe it's stickier than the Fed thinks. So precious metals have been doing poorly because inflation has been coming down, or at least the market thinks and is discounting a lower rate of inflation next year, not deflation, just a lower rate of inflation because it's 5 or 6% now. And so the market thinks that's so, whether that comes down to 3% or 2%, it's still, I mean, it's all bad for precious metals in the near term. However, maybe when the Fed starts hiking, the market realizes, well, you've already discounted inflation coming down, but inflation is going to be stickier than we think. And maybe it's not going to go down actually in 2022. So essentially, stickier inflation that doesn't decline, beyond just coming off this pop that we've seen in the last 12 months. That could be a scenario that is definitely favorable for precious metals, especially if you combine that with the economy next year, like growth maybe peters out next year at the same time. You kind of have that stagflation effect. So we're obviously looking quite a bit ahead, beyond the next 6 or 9 months. But that could be a scenario where, in addition to gold having the initial rebound from the rate hike, in addition to that, gold could have some legs and, rally back to the high based on all that.
All right, so it sounds like we're looking to next year and a lot of ifs there. What the economy is going to do, what the Fed's going to do, and where inflation's going to go. But you're right. Right now, when it comes to the precious metals and the factors pushing them lower, rates are going up, the dollar's going up, the economy still looks like it's doing okay, and inflation has come down a little bit. So that all goes against the precious metals. One more quick comment on gold deals with the gold stocks. GDX, GDXJ, those continue to break down from some key support levels. Where are some of the next potential support levels that you see for either of these then, Jordan?
GDXJ, you have 35. And for GDX, GDX is a little trickier because it has the royalty stocks. But I would, maybe 27 at this point. I mean, I'm also looking at the Huey. I could throw that in there. The Huey has, I'm just pulling it up on my screen. So that's come down to 224 today. That has support at 216. There's a gap there and pretty strong support around 205. So those are levels that I'm looking at. Yeah, I'm more keen on the Huey just because GDX has the royalty companies that have helped it hold up better than the others. But even we see that giving way. But that's, I mean, since we focus on the juniors, I think 35 is one level I'm really focused on for GDXJ. And one indicator to watch is, as far as breadth indicators, it's the daily new 52-week highs, because over the last 5 or 6 years for GDX and GDXJ, you typically see a bottom within one day of when the number of new 52-week highs blows out to the downside. So if you get a day where it's like 60% or 65% of the stocks made a new 52-week low that day, especially if that comes after a decline over the previous week or two, that could set up a short-term bottom. So that's something I'm going to be watching as over the days ahead, because if we get a blowout to the downside, a new 52-week lows, that's going to signal that we should get a decent rebound for at least a little while. And maybe that coincides with gold rebounding from 1675.
Well, Jordan, another thing that you have written about recently was sentiment and how that factors in. And a lot of people look at the daily sentiment index and different factors. They think sentiment's pretty low, but it's typically not a great timing tool. How are you viewing that factor? Because we hear a lot of buzz about sentiment.
Well, yeah, I've learned the hard way. I remember in 2012 and 2013 looking at sentiment indicators and just saying, oh, well, this is at a 4-year low, this is at a 3-year low, this is at a 7-year low. I mean, sentiment indicators, they are very important, but the fundamental catalysts that we're talking about, that along with technicals and then these breadth indicators are more important, because when a market is breaking down or breaking out, sentiment indicators will get really stretched on either side. And so to give an example, I mean, when gold broke out in 2019, the net spec position just surged. And I remember there were people saying, oh, that, while gold was breaking out, they're saying, look, the net spec position, it's too high, it's too high, it's too high, and gold kept moving. So when a market is breaking either way, it's breaking like a multi-year key level, the sentiment indicator, whatever you want to look at, it's going to get really stretched in that direction. So I'm not factoring in sentiment that much. And I will say, to me, the most important indicator for gold, it's the net spec position. It's the actual, the commercial hedgers, the speculators, all these guys who are trading the market. I mentioned it for silver, that's probably going to come close to zero in the next reading. However, the last look at the net spec position in gold, it was 212,000 contracts. So, and if I go back to the 2000s, and a lot of lows in the market coincided with a net spec reading of 20 or 25%. That's divided by open interest. Well, open interest is below 500,000 now. So 25% of that, I mean, we're looking at, or 20%, depending on where open interest is. I mean, that could be 100,000 or 125,000 contracts. We're at 212. Now that's obviously going to come down a lot in the next reading. But still, there's still a huge amount of speculators in the market that can sell. So that's the most important indicator to watch, not these surveys and things like that. To me, at this point in time, it's really the COT. I mean, that's going to tell us when, this sector is really bombed out and ready to rally. And of course, I mean, it goes along with technicals. I mean, we talk about technicals. You need the market to be at really strong support. I mean, 1675 is strong support for gold, but the action in the miners and silver as well, they're telling us that gold is going to break 1675 and trade below that. So, I mean, maybe it's when gold It tests the 50% retrace from 2016. You get it down there, and then you look at sentiment indicators and the net spec position. It's truly significantly low, and then you can look at the stocks and, they're even more bombed out than they are now. Breadth indicators are all at zero. The long term is all at zero, et cetera, et cetera. So those are the things that I'll be looking for in the current context that could tell us, we're going to see at worst a good rebound for a little while.
Yeah, I always get worried when I hear some of the commentators say sentiment's so washed out that we're due for a bounce, because I've heard it time and time again. And I think really sentiment just confirms how bad or how good some sectors are, but it's not a good timing tool. And again, as you pointed to, the technicals and the fundamentals are still pointing to lower prices. Final comment then here, Jordan, when we take a step back, look, it seems like everything in the precious metals is breaking down. Now with silver starting to break down, the stocks, gold and silver, have been breaking lower. Gold, I guess, arguably hasn't broken down because it's not below that 1675 level, but a lot of the gold bulls will say that it has broken down because it's no longer near that 1800 level. What's your takeaway when you do see a sector like this that has been hit over this last year, especially the stocks hit pretty hard, but now we're seeing even more technical breakdowns?
Well, I mean, my takeaway, putting it all together, is that the current fundamental backdrop, I know we talked about it last week, the current fundamental backdrop is bearish. I mean, it's not bullish. Now, yes, bird's eye view, super long-term fundamentals, very bullish. But the here and now, the market is discounting higher real interest rates because the market is starting to sniff tighter policy, while at the same time the market thinks inflation, the rate of inflation, is going to moderate next year. So that is a bad combination for gold. That's the outlook over the next 6 to 9 months, and that just reflects it aligns with the terrible price action in the sector. I mean, the fundamentals, again, they're just not good right now, but that's not permanent. I mean, they're always changing in the gold world. So, once we get through this rough patch and we get to next year, there will be a much better chance, much higher odds of fundamentals becoming bullish again for precious metals. But that, to answer your question in one or two sentences, which I should have done initially, it just reflects to me that the fundamentals they're bearish right now.
Yeah, fair enough. In all fairness, it really seems like everything's going against the precious metals, so you can take that as a contrary indicator, saying that, hey, if one of these things changes, it should provide some support for gold and silver. But right now, unfortunately, the tough market continues. Jordan, thanks as always for your time, buddy. Interesting comments. We'll chat again next week, hopefully with some more hopefully with some good news, but who knows? These markets, they continue to be tough. And one thing to remember, we're ending the quarter and the month here just in a day, and that is not going to be a pretty close. Jordan, thanks as always for your time, buddy. Have a great rest of your week.